Welcome back. We're looking at VIX, vacations, and vaccinations in today's earnings exchange. We've got the action, the story, and the trade on P&G, JetBlue, and Pfizer. Here with our trades is Lee Munson, Portfolio Wealth Advisors President and CIO. All right, Lee, let's start. It's going to be a busy week, and a lot of people are going to overlook these names, so we want to not do that. Let's start with Procter & Gamble. They're on pace for their seventh straight positive month, an impressive streak. Jefferies warning consumer is softening, and pricing weakness could hurt their margins. Would you be a buyer of P&G here?
I want to see this stock get weak. You know, the best time to buy Procter & Gamble, look at a chart, was like April 2018. It's up 18% this year. It can do no wrong. But they have a high PE. I mean, their PE was the same as Apple a few months ago, but they're not even going to grow at 4%. So for a big, wonderful company like Procter & Gamble, you got to buy them like a Procter & Gamble, Costco, a Starbucks. You buy them when they're down. I hope there's a little bad news where you can get it cheap. I wouldn't sell it, but again, it's priced for perfection. I don't see it.
Clever. All right, let's move on to JetBlue then. Talk about sharing in the airline weakness. They're down 22% in the past year. Barclays noting some profitability initiatives haven't come to fruition yet, but leisure travel remains more exposed to overcapacity and weaker fares. What do you do here? The stock, by the way, down another 4% today. It's under $6 a share.
Here's what I need to do. I need to see them actually lower their capacity, but here's the problem. They're not pivoting like Southwest. And let me tell you for what JetBlue that means. They're the only direct flight between Albuquerque and New York, but they don't have any business class in the front. What they need to get a clue is there's a lot of leisure travelers that want to fly in their Mint offering, and so they need to expand that. High margin, it's just free money, and they're not doing it. Until that happens, I'd rather buy a Delta. I don't even want to buy Delta.
I think that's a great point, though, about JetBlue. Maybe they're listening. We'll see. Let's talk Pfizer then, which is coming off its sixth straight positive week, but well off those pandemic highs. Guggenheim talking Paxlovid, some other treatments, watching the pipeline for their oral GLP-1 and a potential COVID-flu combination vaccine. Would you do like Pfizer here?
You know, I like the idea of Pfizer. I'll tell you what Wall Street's really spinning. It's this RSV vaccine thing. It's 1.5% of revenue. Unless you really think that that's going to grow to 5, 10, 15%, I think this is a slow grower. I think you buy it for a big fat dividend. If I want a big, slow growing fat dividend, I'll just buy a value large cap ETF. I think there's better things. I don't see GLP-1 moving the needle on this company.
All right, 10 seconds on the big tech earnings we're going to hear from. I don't think we're going to see you before that, Lee. You exposed to trimming? What do you do?
You know, we just had a nice sell-off. I think that, you know, we saw the come down. We see the NASDAQ going up. We see value and small cap coming down. I say you hold them. Don't fade the Mag 7.
Don't fade it. Chase it. No. Lee, thanks very much. Appreciate your time today. Always good to see you with Portfolio Wealth Advisors.